morning. This is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to talk about this morning is we might be seeing a possible shift in the market, in the equity market that is. It's quite unclear at this moment, but let me just take a look back and tell you what I'm talking about. Basically, the market was in a confirmed uptrend, and it still is in the uptrend. However, over the last 2 weeks, we did see a little bit of selling pressure coming into the equity markets. For instance, last week, the NASDAQ picked up 2 more days of heavy selling, which we'll refer to distribution days, which gives us a total of 4 distribution days over the 2-week period. That in itself is not that bad. However, over a 2-week period, these days are kind of clustered. All the rallies we saw last week came in at lighter volume. So it's not the kind of thing you want to see going forward where the rallies are coming in lighter volume and the days of heavier selling are coming in heavy volume. So right now, this morning, again, the volume's coming in a little bit lighter, and the NASDAQ tried to poke into new highs at the 3260 level. However, it's backed off of that, and now we've just went into slightly negative territory, so we'll have to see how the day ends up. The S&P 500 also trying to close above that high of 1565, the highest closing point it's had up to date, and again, it's backed off of there again. So when a market gets like this, we're not getting a sell signal on the market. However, the market's just telling us that it's entering sort of bit of a holding pattern. Also, over the last 2 weeks, the daily trading ranges have widened out a bit. Prior to that, they're pretty orderly, moving up in a pretty tight fashion. So as a trader, what can you do in an environment like this? Well, we'd say you shouldn't be aggressively buying anything. You'd probably be minding your long positions and watching the stops closely. However, at the same time, you shouldn't be throwing in the towel and forget to look at what's still acting pretty well. Last week we talked about the home builders. The home builders are still acting quite well, and those names are names like Ryland, Meritage Homes, Pulte Homes, Lanier Holdings. So you might want to keep those on your watch list. Also, what we're seeing, some of the gaming stocks are starting to do pretty good. Las Vegas Sands, which has been basically in a 1-year consolidation, possibly may try to break out to the upside. Have to watch that. In the healthcare sector, we still see the healthcare sector performing pretty well. A lot of biotechs doing pretty well, names like Celgene and Biogen, IDEC. And you might want to keep an eye on some of the hospital stocks. Now, THC, Tenet Healthcare, has moved up. It's a bit extended. However, HCA Holdings is just emerging from a consolidation. And if it can take out 3970 level on high volume, that may be something you want to consider. But again, this market, there's no reason to start chasing things and going into the market. Just continue to watch the market, see how it does. So until we see some improvement in the market, until we see some solid days of accumulation, I'd be a little bit leery. Of course, we're entering the last week of the quarter, so you might see a lot of window dressing. So again, no reason to chase the market, no reason to sell the market, just kind of need to buy our time here. Thank you. This is George Tkaczuk with RCM Wealth Advisors, reporting you from the CME Group trading floor, and let price and volume be your guide. Thank you.